Wall Street is agitated by a series of macroeconomic data. The statistics sent mixed signals and challenged the appetite for risk. Trading today is going to be volatile again. InstaForex analysts have already evaluated the metrics. Let's sum up the results of yesterday's trading. The benchmark stock indexes closed with gains on Thursday because economic data increased the bets of the Fed's monetary easing next year. Optimism on Wall Street was also boosted by fresh economic data, strong performance of high-tech stocks, and the intention to buy shares at lower prices after a slump on Wednesday. As a result, the S&P 500 and the Nasdaq added more than 1%. The S&P 500 gained 48 points in the late New York session. It bumped into the upper border of the baseline corridor predicted by our analysts. The index closed at 4,746, or 1.03% up. The US stock market was in a wait-and-see mood before the opening bell today. The major stock indexes were fluctuating in narrow ranges. In the light of the fresh statistics, futures on the stock indexes went down sharply, but then again traded mixed as investors were divided into the optimistic and pessimistic camps. Indeed, the economic data gave food for thought. The S&P 500 is expected to trade into the corridor between 4,737 and 4,774 points. Targets for the sellers are 4,720 and 4,690 points, and the bulls are aiming to hit 4,815. On Thursday, the high-tech sector regained its investment luster thanks to an upbeat quarterly report by Micron Technology. The report encouraged the whole sector. The chip makers' shares jumped by 8.6%. The semiconductor Philadelphia index grew by 2.8%. Shares of US electric vehicle makers Tesla, Lucid Group, and Ribbon Automotive rose by 1.6 to 3% after it was reported that the United States was considering raising tariffs on China's electric vehicle makers. As for the economic calendar, data on Thursday showed that the US economic growth in the third quarter was not as robust as initially reported. Cracks were emerging in a tight labor market that the Fed sees as a barrier to cooling inflation. The fact that third quarter GDP numbers were not revised upward, but were actually downgraded, gave investors confidence that the Fed's path would not change anytime soon. All 11 major S&P 500 sectors closed yesterday in a positive territory, with the consumer discretionary stocks posting the largest percentage gains. US stock index futures fluctuated before the opening bell on Friday, leaning towards the red zone and reflecting traders' wait-and-see attitude. The market was waiting for a batch of data, where the main one was the PCE price index, the Fed's preferred indicator of inflation. The annual US consumer spending inflation rate fell to 2.6% in November, and this is the lowest rate since February 2021. The index dropped from 2.9% last month and was below the forecast of 2.8%. Compared to the previous months, personal consumption expenditures inched down by 0.1%, which was the first decline since July 2022. Although the market was not expecting a decline. Meanwhile, monthly core PCE inflation, which excludes volatile consumer goods, known as the Fed's preferred measure of inflation, remained steady at 0.1% after a downward revision in October. The annual core inflation rate slowed to 3.2% from a 3.4% new low since mid-2021. Anxiety for the market, in turn, was added by data on durable goods, and new orders for manufactured goods rebounded by 5.4% in November, reversing from a 5.1% decline in October. The data significantly exceeded market expectations for a 2.2% increase, and this was the biggest growth in the durable goods orders since July 2020. Other data on building permits and personal income and spending gave mixed signals, and today the market will certainly give priority to a decline in the PCE price index that is the most important for the Federal Reserve. In the corporate news, Nike shares tumbled by 11.9% in the pre-market after the sportswear maker cut its full-year sales forecasts. Occidental Petroleum shares rose by 0.8% after Warren Buffett's Berkshire Hathaway increased its stake in the oil company to nearly 28%. All three stock indexes are poised for an 8th straight week of gains. The S&P 500 is posting its longest weekly winning streak since 2017. As for the currency market, a series of fresh macroeconomic data has worsened the dollar's position. The American currency moved back down again. By the opening bell, its index had lost about 0.3%, dropping to 101.5. Considering the mixed fundamentals, the basic forecast for the index today is outlined within the range of 101.30 to 101.70. On a Friday, the US dollar hit a 5-month low against the New Zealand dollar and a 3-week low against the euro in an early Asian trade before recovering. However, the recovery did not last long. By the opening bell, the index aggravated its losses. Major currency pairs traded cautiously, but the selling pressure on the US dollar was obvious. The dollar index was still on a track for a weekly loss of about 0.82%, following last week's 1.3% decline after the Fed left the door open to cutting rates next year. Meanwhile, the Canadian dollar is extending its strength. By the opening bell, the USD CAD pair was down 0.17%, trading at 1.3260. The instrument is likely to trade into the Canada between 1.3230 and 1.3280. Instead of the expected GDP growth of 0.1% in October, the Canadian economy stalled. And this state of affairs supports the loonie along with the latest statements from the Bank of Canada's governor and inflation data. Oil prices are also rising today, although quite modestly. The crypto market is trading without a clear-cut trajectory, and popular crypto assets are trading mixed and sluggishly today. Bitcoin opened the New York session at 43,620, or 0.9% down. The PCE data could give a fresh impetus to Bitcoin's trajectory. At the same time, the crypto market is the most sensitive to expectations of the verdict from the US Securities and Exchange Commission. The flagship crypto was topped out at 44,200, and the price is touching it from time to time and retraced to 43,650. If the bulls secure the price at 44,200, the door will be open to 45,000 and even $45,600. The alternative scenario suggests a decline to 42,780 and $41,700. That's all for today. If you have any questions, ask them in your comments. InstaForex analysts are open for your feedback. Subscribe to InstaForex TV channel and keep close tabs on the developments in the financial markets. We wish you profitable trading and have a nice weekend, and see you next week.